Good morning, guys. Welcome back to the show. So, what we're going to be talking about today is pretty much where the S&P 500 is at right now. The CPI report came in at 7.1 and the expectation was 7.3, so that made the market rally just a little bit. But if you can tell, it's already starting to sell off very fast. This pretty much lasted maybe 20 minutes. So, what is more than likely going to happen is once it starts to come back down and break that, because we did go up a little bit faster than what I was thinking right here, which is the area, I thought it would take one more day to get up to the line of the bearish divergence here, but it looks like it's actually going to do it faster and come back down. So, which is really good for us because this is what we've been looking at and what we've been expecting. As you can see here, it's starting to roll over. It might come back just for a little bit more, just so we don't take anything off the table, but it's not going to hold. What more than likely is going to happen is it's just going to fall through. If it doesn't fall through here, we'll go sideways a little bit longer and then go for another dump. Here you can see that it's starting to play out with the bearish divergence overhead. This is more than likely going to hold its ground just because of the things that we're already starting to see. Look, it's already dropping. So once it starts getting back into our range, more than likely see a dump followed by, and then bam. Probably more aggressive though. If this happens, let's see. Because it did pop, I'm not taking anything off the table, just want to make sure that it's good. But you can see how it's starting to play out. This already came back here. If anything, I can see that. This, the next wick, which should be around here, like that. So you can tell that it's holding very well. Let's see. Where are we right now? We're right here. It looks like we went back and closed the gap. That's pretty cool. We did that here, but you see how it's going to come back down? It's already coming down. Jeez, that's fast. So where I think we're headed next, remember how in the prior video I was saying that, let me see, that our support area for DXY would be somewhere in this wedge between 104 and 103. It looks like it did touch. The next candle on the daily should come back, probably hold around this area. It may touch 102, but more than likely it's going to pop back up at some point. You see this? We're probably going to get a little bit more of that before we start to bust through. But what I'm really waiting for, and what I'm really waiting for it to play out, would be oil, because oil makes everything skyrocket. And look, see? So if it gets a little like this, just to retest, it would still play out with a bullish divergence that's underneath. And that would make the S&P fall even harder. As we can see, we gapped up, but usually what happens when you gap up is the next few candles, if you gap up just like that, the next few candles come back and close, as to where if you fall and have a gap, more than likely it's going to come back and get it. So right now I'm just waiting for the next candles. The next day or two, it'll come back and fill this gap and then start dropping a lot harder. But as far as the CPI, I do believe that we are nearing a bottom. Whether that be short term or long term, I do believe that this next crash is going to be the bottom right here. And we might get a massive reversal just because everything is starting to play out the way that I was thinking on the larger time frame. If we go back out to the weekly, you can see how once it starts to hold, you see how this is holding above the line. The next thing to do is just fall. If you can't bust up, and break through, you get busted down. That's the famous saying in all of crypto. Right here, this is just on the daily, which is why it looks that way. But look, and if we look at Bitcoin, it just touched here. So once this starts to fall, we're more than likely going to be in this area, which is why it's drawn out right here. So we would have retraced an entire halving, an entire cycle, which is pretty cool. And then right here, you can see how it actually did go up and touch that line. But now we're going to come back down. This is not financial advice. All of this is just education and for you to make your own trades, teaching you how to use these indicators. But look where we're at. Right? So if this plays out just like how it's played out right here, right here, right here, and then it comes back down, say to this area after we get a dump, that would put Bitcoin between the ranges of 9 to 14,000. I'd definitely say 9 to like 12,000. Want to be ready for that. But how long will that last? I have no idea, because the flash crashes here usually tend to be bought up extremely quick. And I'm talking within like less than 15 minutes. The machines are already on it. They take maybe like 2 minutes to react once it stabilizes at a certain floor. And at that point, they just buy it up. So if you're looking for that, you are going to have to be on it. I don't believe it is going to last. I do believe that crash is going to be the trigger of something, of us moving up. Because look, say we were to crash right here, what would happen? It makes a quadruple bearish divergence right here playing into it. And then what would happen is one candle or two maybe, and then bam. Because you're starting to squeeze into the bearish divergence here, and you're running out of space. Once you start getting this crossover right here, which triggers the final little dump, that's what the chart says, and that's what it's showing. So why would we not listen to the chart? They're there to help you. They're there to give you an idea of what you're walking into. That's all it does. It doesn't lie. So the next thing to happen is more than likely a dump in the S&P 500 and all across the market. It's going to dump. Not financial advice. This is just what I'm looking at, how I've been looking at these sorts of things and trying to get ready. This did not last. You see, it tried to break through the falling wedge right here, or the bearish divergence, and it failed. So in the next couple of days, we're going to start to see a drastic drop followed by big volume in that drop. If we break down below this middle line right here, what's going to happen is we will try and go back up and retest it. Maybe it might break through short term and then come back down. We saw that here. We saw that here. It's pretty much all over the place, even here, but this one went all the way down. So that's a little bit different. That would come back to the support. But anything as far as here, more than likely it'll come back and retest, whether it's hits on the line and then bounces or breaks under. You'll still get that reversal. Where home is, I do believe, is in this area. If we break lower than that, you're talking about a hard landing, and that would put Bitcoin all the way back into like 2720, or not Bitcoin, the S&P 500 back in 2800 territory. But I do believe the soft landing will be the bounce, and that would be between the 3200 area. If we bounce here, get this is what I'm thinking may play out. None of this is financial advice. So once we do here, see that? Something like that. How far up we go after that, no one knows, just because it is a little bit. Say we could either go here. We could either go here. Oh, draw another one. It's good to start drawing these out before it starts to happen, just so you know where you're headed. I'm just going to leave those there from now on. But so this is what I'm thinking is going to happen. It could either be right here where we get the bounce and then come back down, or under it. But either or, we are still headed downwards. You can see that the bearish divergence right here on the S&P 500 has been in place since pretty much October. And it's playing out perfectly. It's just a matter of patience and making sure you're able to catch the trades as they play out. Sometimes they happen at like 3, 4 o'clock in the morning, which is crazy being up that early, but hey, and look. So oil playing out little by little. It's taking forever to play out, but you got to be patient with the markets, otherwise you get wrecked. Once this third bullish divergence plays out, more than likely we're going to see a large pop up in oil. Oil will make energy prices skyrocket. Once that happens, Bitcoin and the S&P 500, I believe, will start to make that final leg down, and we may start already getting it now because of the pump that we saw this morning into the CPI data. Even though it did come in under expectations by what, 0.2, it's still a little bit elevated. And what the market is going to do if it rallies into the Fed is, think about it this way: if the Fed has to be more hawkish because the market is rallying, which goes against what they're trying to do in controlling asset prices and inflation, if the market starts pumping, that makes inflation go higher, because that means that the Fed has to come out even more hawkish. Otherwise, they risk inflation going higher. So, in order to beat inflation going higher, they would have to come out more hawkish. Even if they come out at 50 basis points, they're going to have to be more hawkish in order to knock down the market to the area where they want to see it at. But I do believe that they are running out of room to be able to do that. So, if they come out hawkish tomorrow or Wednesday, that's going to be the final leg down. I don't know if we're going to go any lower than that, and I will be setting up my positions there, because this is more than likely what we're going to see. Finish here, come back. I don't know if we're going to get another one like that to play out on the daily scale. Let's see. We may get one or two more, but around those price levels, that is an insane opportunity, just because of where we're at. The Fed is about to start cooling off with increasing rates. They're going to level off and hold for a while. They may do 50 basis points coming up, and then 25 or another 50 next year, but then they'll level off. What's going to happen after that is the market usually, per history, none of this is financial advice, but per history, what ends up happening is when the Fed ends up cooling off and just holding interest rates, they usually see a pump in the markets. And when the market is doing that, it's because, like, they see that the Fed has only one or two ways. If inflation cools and starts to go back down, they're going to have to cut interest rates. But once they start to cut interest rates, that's the sign that you need to be very, very careful for, because whenever the Fed starts to increase interest rates, or not increase, to decrease interest rates, that's a bad sign, because that usually means something broke in the economy and they have to come rescue it. Per history, that's usually always what's happened. Not financial advice, just go look at it yourself. Pull up interest rates and pull up the S&P 500, and you'll be able to line them up, because it's not in the same chart. I would easily show you, but it's not in the same chart. So what I'm going to do is just have you go look at it. Interest rates line up the years, and you can see how that's usually led to a fall in the market after they pivot. But after today, what I think is going to happen tomorrow is we're going to start seeing a few legs down, because right here, if you can't bust through, you get busted down. What's happening with the S&P 500? Look at this. It's already starting to sell off. So more than likely, we'll see a drop. When the drop happens in the next couple days, you can tell by the bearish divergence here. And this came up to test resistance, failed, came back, but I don't think it's done. I think it might make like a drop, make a few little pushes here. Next 3 candles might be the drop, and then it'll start to chill out. But I do not believe we're going to break through. If like it did here, and then it immediately got sold off. So if it hovers around this area, just know it's part of what the bearish divergence is doing, but it should start to break down, because if you can't bust through, you get busted down, and that's what's going to happen here. So if it flirts with it for like 1, 2, 3 days, cool. But I don't see this pulling off. I do believe we're going to go down and play out perfectly like this. So whatever it decides to do, however it decides to structure itself on the way down, that's a different story. That's just painting the picture. What I'm really looking at is the bearish divergences and the bullish divergence here on the rate of change, because now we hit resistance and we got sold off. It might come back for a little bit more next candle or two, as we can see here. You see how it does that, and then it finally breaks through. So if it does that, we're going to come back down. It'd be funny if it bounced off of this and then tried to come up here and then got sold off. So however it wants to play out in the short-term picture here, that's one thing. But the larger picture, that's how it looks right here. Until this breaks, that's when I would start getting bullish, because if you start going down here and down here, more than likely this is going to put Bitcoin between 9 and 14,000. If it makes a new one, it'll put Bitcoin around 8 to like 13,000. But I don't see Bitcoin going lower than that. If it goes lower than that, you start putting MicroStrategy and Michael Saylor, Michael Saylor around in dangerous waters, because if his, if his leverage position for Bitcoin, or not leverage position, but if his, if his margin call is around 3,000 a Bitcoin, I think he had said it was like 3,500. That's dangerous. But we still have a lot of room to go to. So don't be afraid of the market. Just be patient, especially in these times. Just be very patient. Look, it's selling off. Oh my God. It's happening as we're doing this. This is great. Okay, cool. So we're not, more than likely, we're not going to come do any of that here. We're just going to, if it decides to go straight down, you'll know in the next 2 to 3 candles. These are daily candles. So in the next 2 to 3 days, you'll have my videos up showing what happened. But more than likely, we're going to see this play out. But if you guys have any questions, things are getting really exciting now, because CPI, the Fed is literally almost about to just stop increasing rates. It's about to be a good time, but we're not there just yet. Almost there, but not there. Okay, so stay tuned. I'll be posting all the videos on the daily now, on Monday through Friday, so you'll be able to see them in the mornings, if not sometimes in the afternoon. But for now, have yourself a great day and good luck trading.